Hey everyone, let's go over Robinhood's IPO and their S1 that they recently released. They're gonna go public with the ticker HOOD, and they're a fintech brokerage app. Before we start, please don't forget to subscribe to help me make more videos like this. Founded in 2013, Robinhood is one of the fastest growing fintech startups in the world, and they have an annualized revenue run rate of $2 billion, and they're expected to go IPO at a $40 billion valuation, a 20 times revenue run rate valuation. Robinhood has an adjusted EBITDA of $400 million of the fiscal year of 2021. That means that their valuation is 100 times their EBITDA. Let's take a look at Robinhood's key metrics. Robinhood has $18 million funded accounts, of which 17.7 are monthly active users. That's a growth of 105% over 8.6 million users in the previous year of 2019. And one of the craziest stats is that 47% of these monthly active users are daily active users. That's on par with social networks like Facebook and others alike that have daily active users at around 50% of their monthly active users. That's crazy engagement. Robinhood has around $81 billion of assets under management. That includes equities, options, cash, and even crypto. The biggest drivers of Robinhood revenue are, first, transactional revenue. That accounts for 80% of their total revenue. And that means that whenever Robinhood receives a request to buy or sell stocks and other financial assets, they route their customer orders to market makers. For equities and options, that's called payment for order flow. And for crypto, that's called transactional rebates. Essentially, when a user places an order through Robinhood, Robinhood routes that order to companies like Citadel and Virtu, and they can choose to execute that order, and they pay Robinhood a few cents per order that they receive, typically a fraction of cents per share. Robinhood made $450 million for the first 3 quarters of 2020, and Robinhood gets paid by 5 market makers. That includes Citadel, Virtu, G1X, 2 Sigma, and Wolverine Securities. And that's the most controversial part of how Robinhood makes money. That's what customers usually complain when they mention that Robinhood makes money out of them. The interesting part is that all other brokerage firms make money in the same way, as you can see in this graph. Robinhood revenue from market makers is highly concentrated. Citadel makes up 34% of their total revenue of the payment from their payments that they get to execute their trades. Market makers made up 75% of their revenue last year. That's up from 67% that they made on the previous year. This is the asset breakdown of transactional revenue over the total revenue. 38% comes from equities, 26% comes from options, and 17% comes from crypto. So Robinhood sells your order flow to other companies, which may cost you a few cents per share, right? So that means that Robinhood will still have the best price amongst brokerage firms. That's not exactly right. The SEC made some research into that, and Robinhood has the highest costs because shares go up in price when people execute when people execute a huge buy of 100 shares and whatnot, the price per share goes up a ton more than what you would pay if you paid for the execution of the trades. The second way that Robinhood makes money is through net interest. Robinhood sits on a lot of cash, and they make around 12% of the total revenue on net interest of that cash that they sit on. The third part of how Robinhood makes money is through their subscription service, or Robinhood Gold. They make around 8% of the total revenue, and with this subscription offering, you can get a few benefits. That gives users access to level 2 market data and allow them to borrow to trade on margin as well. Now let's take a look at their total number of customers. They have 18.8 million funded accounts in their app. That's on top of their previous year that they had 12 million accounts, and on top of 5 million accounts in 2019. That's a 143% growth year over year. That's crazy growth, and that was mainly driven by COVID plus stimulus checks or stimmies. Now let's take a look at Robinhood's core products. Their core products include trading platform, crypto trading, and cash management. Their fastest growing segments are crypto, which has been growing at a 2,000% growth year over year. That's crazy growth. Equities, which is growing at a 322% year over year, and options, which is growing at 231%. Robinhood has $81 billion of assets under custody, which include $65 billion of equities, $2 billion of options, $11.5 billion of crypto. That's crazy high. And $7.6 billion of cash and $5 billion of margin. Their crypto business is growing like weeds, and it's very, very new, which is really impressive. Let's take a look at net deposits and annual revenue by cohort. The annual revenue by cohort is growing faster than net deposits. That means that the revenue per dollar in the platform is growing. The revenue per dollar is increasing over time. That means that Robinhood is making more money per dollar invested in their platform. That's interesting to see. On user growth and engagement, as we talked earlier, they are growing at 145% year over year, and of which 80% was brought in organically through referral links. That's crazy. So that means that they don't need to spend that much money in marketing to get users to their platform. Let's take a look at unit economics. Their CAC has been going down over time, and that's probably related to the COVID crisis and the stimulus checks. We'll see if that trend continues. But their payback period has gone down from 13 months in 2019 to 5 months in 2020 to 3 months. That's crazy good. It was really good at the beginning and just got better. From looking at cohorts data, we can see that net deposits from early cohorts has increased 2 to 3 times what they were 2 years ago. That means that people are putting more money at the beginning than they were in the past 2 years. That's great to see. 2020 was a crazy accelerant to the business. We'll see if that trend continues in the next few years. Let's take a look at the crypto business, because that's the most interesting part of the whole business and it's growing like weeds. They have 9.5 million customers trading crypto on their platform. Robinhood's crypto assets has grown 8.5 times in 2020, and in the early parts of 2021 it has grown 3.1 times previous year, and it now represents 14% of all their assets under management. That's crazy growth. Let's take a look at volumes of crypto trading. There was around $88 billion of volume on Robinhood. That's crazy to see. For comparison, Coinbase had $335 billion of total volume of crypto trading, of which $100 billion was from retail operations. So Robinhood and Coinbase are trading similar sizes of volume of crypto for the retail operation. Revenue from crypto grew 20 times to $81 million in Q1. It's worth mentioning that the take rate inside Robinhood is orders of magnitude smaller than Coinbase. That's why they make much less money than Coinbase on their crypto trading. Let's take a look at the brokerage part of their business. The total number of accounts is getting closer and closer to the top competitors in this field. That is Schwab and Fidelity. Robinhood also states that they believe 50% of the new funded accounts in brokerage went to create their account on Robinhood. That's great to see, and their growth is much faster than their competitors. Robinhood has a lot of fewer assets under custody compared to their competitors. That's probably because the profile of people using Robinhood is a younger generation. However, Robinhood revenue per dollar in its platform is much higher than their competitors. They make 3 to 7 times more than their competitors. That's driven mostly because the money in their accounts is being traded much more frequent compared to their competitors like Schwab or TD Ameritrade. Now let's take a look at the risks. Robinhood risks include public perception, regulation, and competition. First, let's talk about the problem that Robinhood faced when the GameStop frenzy happened. According to Robinhood's CEO, a regulator called NSCC demanded $3 billion at 3 a.m. overnight, else Robinhood could not trade anymore. They resolved this issue, as you can hear from this Clubhouse chat.
Securities comes in, we have to put up money to the NSCC based on some factors, including things like the volatility of the trading activity, concentration into certain securities, and this is the equities business, so it's based on stock trading and not options trading or anything else. So they gave us a file with a deposit, and the request was around $3 billion, which is, about an order of magnitude more than what it typically is, right? So
no, why was that so high? Like, this seems like it sounds like this is an unprecedented increase in demand for capital.
But eventually, Robinhood was fined $70 million from another regulator stating that they misled customers. They fined Robinhood $70 million. And FINRA is a self-regulatory agency. That means that it's a regulatory agency set up by industry participants so that the government doesn't need to step in when problems like that happen. To prevent regulatory problems like that, Robinhood hired the former SEC head, giving him around $30 million per year of compensation. That's all with stock grants. That's crazy. All in all, Robinhood looks like an amazing business with 18 million funded accounts. That means only 6% of the total American population. It has a lot of room to grow in terms of dollars in its platform and with customers on its platform. Its growth looks great. There are a few risks, and we'll see if this turns out to be a great investment. I hope you liked this video. Let me know if you have any questions down below. Thanks for watching. See ya!